So I just got an inheritance. Can I use that money to buy a home? So again, this is kind of like a multi-layered question. I would need to know specifically what this person is asking. The answer is yes. Like an inheritance is an allowable source of funds. So like, obviously your relative that passed away is not going to be able to give you a gift letter. Copy of the will, it basically explains where the deposit is. As far as whether, so can you use that for a down payment? The answer is absolutely yes. You still would need to qualify for a mortgage though. So depending on the amount of the inheritance, right? If we're talking about, let's just say $40,000 and somebody is unemployed, it would be very difficult for somebody in that situation to qualify for a mortgage with no income, and a $40,000 cash injection. That's not really going to do much to change a deal. Now, somebody who got a more substantial amount of money for an inheritance but still wants to take out a mortgage, the answer is yes. It depends on the rest of your situation. You still have to credit qualify for a loan if you have a substantial amount of money. But typically, like if somebody, I don't want to throw around too many numbers here, but like let's say that you have a substantial amount of money, you got $2 million inheritance, but obviously you don't, you want to buy a $500,000 house, you don't want to pay cash, you want to take out a mortgage, and you have no job. If you have decent credit, you know what I mean, let's just say 660 credit score, for example, or better. We have these loan programs that are called asset depletion loans that would be a perfect fit for this type of situation, where we will basically look at a lump sum of money that you've received. And there's a couple different ways. I've talked about this before in these videos. There's a couple different ways we can do the calculation. We can take, the total amount of money that you have and divide it by 60, and that's going to be just considered your income. So, let's say $2 million divided by 60 is about, I wish my math was better. That's about $60,000 a month, give or take. No, it's not. Anyway. Or we can look at it as you have enough money to pay for the house in cash, basically. So like if you're buying a $500,000 house, you're putting $100,000 down, right? It's a $400,000 loan. Well, if you have $2 million, we can see that you have $400,000 in cash in another account. We can use that to qualify you without doing any other calculation. We just see, all right, there's enough money to cover the loan. That's an approval. So we do that instead of an income calculation. I've talked about this before. It's called ATR in full, ability to repay in full. And that gets into all this, mortgage nerd stuff, where we're required by law on any primary residence transaction to verify ability to repay. It's something that came out of Dodd-Frank and all of the regulations following the financial collapse. It's the reason that you can't just get a mortgage, with stated income or like with no documentation on a primary residence, but sometimes you can on an investment property. We're required to verify that somebody has the ability to repay a loan and that we're not giving loans out to people who can't afford them, in order to, there's something called a rebuttable presumption, which basically is what makes the loan enforceable, where we can actually go and, or the lender can go and take the house if somebody doesn't pay. If we do not verify ability to repay, the loan basically becomes unenforceable, where if you went to try and foreclose on a residence, the court might determine that you made a loan to somebody who you knew couldn't afford it and basically invalidate your ability to seize the collateral. So, that's a 30-second Reader's Digest version of why we have to verify that somebody can repay a loan, and why, somebody needs to show income or assets to be able to get a loan. But the long story short is if you have a substantial amount of money in the bank, there are options for you that you can use that to qualify for a loan, as long as you meet the other credit, credit, collateral, title requirements for that program.